You did exactly what traditional financial planning told you to do. But here's the problem. Now you're in your 60s, you're trying to get down the mountain. You need your nest egg to last you as long as possible. What if your $800,000 didn't have so much pressure on it? Because right now as it stands, his 800,000 has to last him for the rest of his life. But that 800,000 also has to leave a legacy for his family. Welcome to another edition of Wealth Strategies to Value. I am your host, Troy Shorts. And today I'm going to share with you some experiences that I've had with some clients recently. And it really reinforces that Shorts and Associates is on the right road. Traditional planning has failed us for a long time. And I'm going to give you an example of a client that I just met with this week. And he was in his 60s. And he done very well. He'd accumulated approximately $800,000 in some deferred accounts for retirement that he felt was, going to be able to last him through retirement. So after asking him some questions, it really came down to, he was told information when he was younger that he was supposed to buy term insurance and invest the difference. Well, he's now in his 60s and his term insurance has expired. And when we were asking him some questions about what are some important financial goals for you at this particular time in your life, well, the first thing he said to me was, I want to be able to leave a legacy for my family. I want to make sure if God forbid something happens to me, my family can maintain the lifestyle that we've acquired up to this point. So when we went back to looking at his account, what I explained to him is traditional planning says you can only withdraw approximately 3% per year with an 85% chance of never running out of money. So when you do the math, 3% of 800,000, that's not a lot of money to live on every year, right? So what I explained to him is you did exactly what traditional financial planning told you to do. But here's the problem. Now you're in your 60s, you're trying to get down the mountain. You need your nest egg to last you as long as possible. What if your $800,000 didn't have so much pressure on it? Because right now as it stands, his 800,000 has to last him for the rest of his life. But that 800,000 also has to leave a legacy for his family. What I'm saying to my client is, let's take the pressure off. See, your money, there's too much pressure. Your 800,000 has to do such a large job. You see, what if back 25, 30 years ago, you did some different planning, you did some different strategizing, and you thought about the exit strategy before you get to the end? You see, this is where our research comes in. We call this the 1% solution. This is what I share with my client. I said, what if your 800,000 could only do one job instead of doing two jobs? What if you could use your 800,000 for you and your wife to spend and enjoy while you're alive, and then have your life insurance be in effect to take care of the people that you love to leave a legacy? Therefore, your 800,000 is going to be more efficient. Well, he thought, wow, that makes a lot of sense. So one of the things that we talk about is instead of buying term insurance and letting it expire like my client did, now he's in his 60s, right? And his nest egg is not going to be enough. Like, why didn't his advisor explain this to him 25 or 35 years ago, right? Because traditional planning doesn't look at the back end, doesn't look at the distribution. Here's why we're so valuable. We're having a distribution conversation, right? So when you're talking with your advisor, you need to say to them or him or her, hey, listen, how is this going to affect me on the back end when it's time for me to reap the rewards after sowing all this seed, right? So the 1% solution says it's pretty simple. We take 1% of the 800,000. We buy a life insurance policy. You see, that death benefit takes care of his loved ones, tax exempt. That death benefit's always going to be on the books. Now, he can take the balance of his 800,000 and he'll have more than enough to live on for him and his wife to enjoy their retirement years, and it just takes all the pressure off. So I just wanted to share this quick story with you guys because, you know, traditional financial planning, what we're discovering is it just doesn't work. It's just not as efficient. See, the game has changed, but we're still playing by the old rules. All right. There's new problems in the world that require new technology, and we have the technology. So that's all I have for you guys today. Thanks for tuning in. And again, come back and join us for Wealth Strategies to Value. Thanks. Bye-bye.